Guys, let's talk about one of the big winners from the e-commerce space of the current situation. Now, we know about Amazon, but what about Shopify? If we're just looking into the stock right now, then you see that just on Friday, we did 12 or more %. And you know what I smell? You know what I smell? I smell money. I smell money that neither you or me is making because we are not invested into the stock. But let's have a quick and deep dive into the company and what makes it so special and why maybe or maybe not we should invest, so stay tuned. So welcome to another vlog here on Wolf of Dubai. Make sure to subscribe and ring the bell and also smash the thumbs up button for this mighty algorithm that will help to grow this channel and our community here, investors that look for the next big thing. And by researching, the next big thing, obviously the e-commerce is something that is very, very important. Now we all stay at home. Now we all don't go out that much or reduce our outdoor activity. And therefore we need companies that are online and just deliver assets by courier, and those you can order by a mouse click. And therefore there is one company that is making a really good money and a really good traffic impression to me, which is Shopify. Shopify, a Canadian international company founded 2004 and having more than 5,000 employees, about $1 billion of revenue, and they are growing up. Approximately now the stock is about 8% more than the last highs in February, but I want to go really into detail why the stock is so important right now and also why Shopify went up 12%. So the topics that we will talk about is obviously the revenue. We will talk about the cash position in Shopify. We will talk about the overall company stock. We will talk about the CTO that just tweeted something very, very important, and we talk about consumer behavior. Now, if we are looking into the revenue of Shopify, we see over the last couple of years, we had a lot of increasement by 50% on average every single year. And by end of last year, Shopify even made $1.6 billion in revenue. Now, by considering 50% revenue growth, that I would say this is definitely a growth stock company, which is then entitled to not be looked under too much in detail into the PE ratio, because as you know that if PE ratio is important, then it's not a growth company anymore. So that's what we can say here on Wall Street. However, though, if we are looking into the balance sheet of this company, we see a nice growing cash pile on the balance sheet with about $2.5 billion. And we see overall still not positive EBITDA. This means that the company Shopify is not profitable since 2004. This is something that maybe the one or the other will be seen a negative, but what is important for me is to see what's below that. But in the end of the day, we can see that this company is definitely on a horizon to new highs. Well, this is not hard to tell after you see the graph on the stock market, but I want to go with you into the company details. Let's have a look into the overall main characteristics of the company. As of this recording, we have about 50 billion of market cap as of this recording. And if we're looking into the PE, we can just look into a forward PE, because a forward PE is telling us, you know, by the expecting earnings, how much a PE would be if this company would be profitable, and therefore the forward PE just giving us an indication. And wow, this PE is at 2.5 thousand, okay, not hundreds, not single digits. This is 2,500 PE ratio. This is skyrocket high. All right, I barely don't see any companies out there that have so high PE ratios. But again, it's a growth story. So the more important part is the PEG ratio that is not here. So we need to calculate it. So if you're looking into our PEG calculator, which is one of the most important metrics for growth companies, because you take the PE ratio, in this case the forward PE ratio, and then you divide it by the growth rate, because in the end of the day, maybe you have a huge PE ratio or forward PE ratio, but maybe the stock is growing super high, like we have seen in Beyond Meat, which was in the indicator of about below 1, which means that the company is rather inexpensive considering the growth of the company. But if we are putting those numbers into Shopify in our calculator, 2,500 forward PE divided by 50% growth rate, then we see that the PEG or the forward PEG ratio is just at 50. This is also very, very high. So this means that overall, you know, the good things about the company so far is they have a lot of cash on the balance sheet, but they have a huge valuation if you're considering the PE or the forward PE and the forward PEG ratio, which, you know, is in my perspective something also important if you're looking into growth numbers. So what can actually give us a sentiment, what make us invest into the companies? And as you might know, I put this company on the watch list of my Wolf of Dubai watch list, and therefore what makes me currently think that maybe it's a great investment into Shopify. Let's have a look. So the stock is an absolutely outperformer. If you're looking into the chart of the last 2 years, we have grown from $126 to almost $600. This is a 365% gain into the stock over the last 2 years. Now, even if we're looking into last year, also here you see a huge growth of about half of that what we see over the last 2 years. And if you're just looking into the last months, since you know the current situation evolved, we have seen that the first, let's say almost the first quarter was stayed flat, just a gain of 10%, and then obviously we had a huge decline of 30%, which is an average. You know, it's not the biggest decline like Carnival, for example, that lost 80-90%, but it's also not the lowest that on the market that was currently affected. Therefore, you know, it's somewhere in the low midfield of stocks that gained down. And I think this is also important to see, okay, how stocks and company react on this kind of new situation. How the stock is it very volatile? So you can see that you know, we had here then the up, and then again we had the down, then an up from the lows 25%, then we went almost back to those lows, and then we just from the recent lows we gained 70%, guys. This is absolutely insane. So if we are looking into the stock, it's very important to know two things. Now, as you know, these are the numbers around the stock and around the balance sheet and around the technicals of the company and the value perspective. We know this company is growing about 50% per year, and now we need to see which news or world or consumer behavior makes this stock maybe one of the biggest investments of 2020. Now think about that Spotify is giving us the whole infrastructure for the perfect work from home side hustle that people are looking for, all right? We have seen drop shipping is exploding from the last couple of years, and Shopify was a big advancer of this trend. But think about now, the people are mostly at home, they may be not safe in their job, they have much more time online and think, well, maybe I should do a side hustle from home online. And then you have Shopify that brings you not only the platform, it brings you the storage, it brings you all the templates that you need, the point of sales management, they have advertising tools, so everything what you need from A to Z in just one big subscription model. And this is the beauty about Shopify. This is the future, that people will create side hustles on the regular, and therefore I believe they could be one of the biggest winners in the next 2 quarters. Not only the last quarter is important, also the quarter after we shall see. And this is also supported by the recent tweet of the CTO that make the stock on Friday just explode. And this was a tweet that showed that they are looking for new employees that can help this company to grow, because they just have so much traffic, guys. And we are talking Black Friday traffic, okay? And we're talking about constant Black Friday traffic. This is unprecedented. And I think, this is also a small hint what Amazon can see on their platform. And Amazon, as you know, is also the hoster and have the advertising business as well. But Shopify can be the future, and I don't see any bigger component there. And if we are holding these levels, and we are just 8% from the highest point recently, maybe then it's something worth to play for. So I have 2 opinions about Shopify to conclude this vlog. So first of all, I think if you're looking for growth stocks, they are different growth stocks out there that maybe have a better or brighter future than Shopify, maybe are better valuated, all right? But on the other side, I believe that beside Amazon, it's a great play that Shopify will benefit huge, okay? And stocks don't have any conscience. They don't know that they were at all-time high, and that there's no reason why stocks cannot make triple or even quadruple or 10 times their value on absolutely insane valuations. Therefore, if you're looking for a stock that is a little bit of speculation, then I think Shopify is a really great deal.